Hey, my name's James Nicholson. I hope you guys are well. This is the second of a weekly series. We've said, thanks to your feedback, that we would do a weekly video, and in that video we would look at the best mortgages each and every week. And this is going to give you the best mortgage rates for HMOs, for limited company buy-to-lets, for buy-to-lets in your own name, or maybe the house that you live in, your residential mortgage. So we've looked at the market. In fact, some of you have given us feedback on the last video and suggested some places that we look at. Shout out to a guy called Jake who suggested this first company, which is Fleet Mortgages. Now, if you see a deal that maybe we've missed, because there are hundreds of lenders, thousands of products on the market, then comment below. Let me know that I should go and check out a rate with someone else. Maybe it's a specialist lender that's got some great deals on at the moment. I'd love to know all your feedback, and any questions that you've got, do comment below as well. Now, while you're here, if you haven't done already, do subscribe to the channel. I don't know where it's going to be, around here somewhere. It's all back to front, this, what I'm doing here. Just subscribe to the channel and hit the bell notification. We're very close to 20,000 subscribers. Maybe we've hit it already, but you'll see around how close we are. Do smash the like button or tickle the like button. That really helps me with the YouTube algorithm. It's really important for the channel, helps us get views. Every time you do it, you're really helping us out. So let's look at the first type of mortgage, which a few of you asked for, which is an HMO mortgage. Now, this stands for House of Multiple Occupancy. And this is a great strategy. It's a high cash flow strategy, which is why we like it. And using this type of strategy will get you better yields, it'll make you better money, and make your income way more predictable. And so we've got videos on the channel about how we actually turn a property into an HMO. And that's where you might take a 3-bedroom property, you might make the living room and the dining room, you might turn those into other bedrooms. And by doing that, you're really going to maximize the income. So we've got two different rates here, and we looked at, this is a mortgage lender. I've not heard of them, if I'm to be honest. So that is worth commenting. Jake that mentioned these, I hadn't heard of Fleet Mortgages. They are part of Starling Bank, who I have heard of. So a lot of these big banks have other sub-brands and stuff like that. But Fleet Mortgages, they have a 5-year rate, which is at 5.93, which seems high, but there's no fees, which is really good, because some of these lenders will lend like to buy-to-let companies and stuff like that, but the fees might be as high as 8%, which is really crazy money. So it really makes a big difference seeing no fees on this. 5.93 is a good rate, and remember, you're going to make more cash flow anyway. They'll lend at 75% loan to value, same as a buy-to-let. They also have a 2-year rate, which that 2-year rate sits at 5.29, again with 0 fees and 75% loan to value. So decent options here. So if you're in the HMO market, go and check these guys out. Limited companies. So I've got 2 different companies I want to show you here, because at the end of the day, this channel is about investing in property. The best way to do that now is in a limited company. I've got a lot of my properties in my personal name because I've been investing 25 years, but all my new deals go into limited companies now. And so Fleet Mortgages, again, these guys have got some good deals out there. 5-year fixed is at 5.59, 0% fees on that, which is decent. And so that's really, really good. 75% loan to value. They've got a 2-year rate with those guys as well at 4.89. That has a 3% fee, which isn't too bad. Now, why would you consider taking a 3% fee? Because that kind of makes it close to 7%. Well, it makes it, you got that 3% is split over 2 years, isn't it? So it's going to add like 1.5% onto that 2-year deal. Why would you consider that? Well, some people borrowed or bought in the last couple of years, and buy-to-lets, the numbers have to stack up. So if you haven't increased the rent, your rent doesn't justify the higher rate, then you're going to have to to pass affordability, take a lower rate with a higher fee. It kind of gets you around that. So Fleet Mortgages is a good one for limited companies. Next one is Lambay. I use these guys. The fees are quite big on this, but Lambay have a 5-year rate, which is at 4.49. The fees are 6%. Now, I know in the comments people are going to say these fees are crazy, but remember, these are for a landlord that maybe doesn't have much equity in that property, and maybe they don't have many options. They're not getting a high rent because maybe it's in the south of England rather than the north of England, so the yield is slightly lower. So what they've got to do to get the affordability is to get a lower rate with a company like Lambay, but Lambay are going to make the money on the fees. That's how that's going to work. So these are options if that's you. So that's another option. If you're not, if this isn't you, then probably Fleet might be the better option. 2-year fixed is good rate, 3.49, but you know why that's there. That's low to get the affordability to pass. This is probably aimed at landlords that are using the south of England, but just a standard buy-to-let in the south of England where the yields aren't particularly high. So go and have those a look at those as an option. Now, a normal buy-to-let, just a standard buy-to-let that's in your personal name. This is the majority of the market. A lot of landlords have these. And so, not bad, these rates. Mortgage Works, I think they're nationwide. I always forget, every single time I forget. They're nationwide or Halifax. Irrelevant, they're sub-brand anyway. And so, the Mortgage Works is a decent lender. I got a rate the other day for 3.99 on a remortgage with them. They give worse rates to their existing customer, as all these companies do, like Sky and all that. Everyone gives you a worse deal on the re-sign, don't they? But 5 years, these guys have a rate of 4.04, which is pretty good. Fees are 2,250, not bad, not great on a 50 grand house, but if you've got a 200 grand house or more, it's pretty good. Even if it's on a 100 grand house or 100 grand that you want to borrow, it's not bad. 75% loan to value on that. Their 2-year deal is decent. This is better than I got, and this is today on the 15th of February. It's 3.79%, and the fees are 2,250 again. So not bad if you've got this in your personal name. So that would be Mortgage Works would probably be my first port of call to go and have a look. And last but not least is residential, which is the majority of the market, right? And so residential rates, Santander, interestingly, dropped rates this week. Nationwide put rates up, which was interesting. So a 5-year fixed with Santander, 4.14%, 999 quid on the fees. That's not bad. Well, it's not bad if you've got a big mortgage. Obviously not great if you've got a 50 grand mortgage, but then the fees are moving in the right direction. Fees were like 5 grand a year ago, and rates were 6.5%, 7%. So this is definitely way better than that. The 2-year deal is pretty good as well, 4.30, 999. So that's the roundup really. I think these are pretty decent. The rates, some of them are marginally more expensive since last week, and that's because swap rates went up. Inflation didn't go down, so swap rates went up. They're predicting that the Bank of England and the Federal Reserve won't drop rates until May at the earliest. That's changed a bit. But we've had some recession data in the UK on the 15th of February. So maybe that will get the Bank of England to think. Normally how you get out of recession, what you normally would do is to cut interest rates. But we're in a stagflation at the moment. So we've got high inflation and a recession. That's called stagflation. Let's see how they're going to react on that. It's interesting to see what happens. Hopefully they bring those interest rate cuts forward. But where I feel interest rates are going to get to, I think the rate that you can borrow at, I think the best rate that you'll see this year is 3.5%. So we're not far off that with any of these. In fact, we saw one at 3.49, but that had high fees. So I don't think it's worth waiting. I think if you need to do a remortgage, look for the best price, get it fixed in now, and get it moved on. Yes, you might get slightly cheaper in a few months, but I don't think it's worth risking that, and I don't think it's worth going onto a tracker rate. Anyway, if you find any lenders that you feel I should go and look at, comment below. If you haven't joined the Serviced Accommodation Accelerator, that expires on Sunday. Remember, it's £99 at the moment. Tons of you have enrolled in that, so thank you to everyone that has. I'm going to put a link in the description and in the pinned comments where you can grab the Serviced Accommodation Accelerator for just £99. That will teach you how to high cash flow your investment strategy and portfolio. It's a great skill set to have, and as landlords, if you want to be a property investor, you need to know all the different strategies to figure out which one's best for you. So do check out that. There's 100 detailed videos in that, and that will really help you move forward. Let me know any other questions you've got in the comments below. Do smash like, do subscribe, check out some other content on my channel, including one of the videos right above here.